10 minutes.
Oh, geez.
So busy day, lots getting done.
Yeah.
And so appreciate you continuing to put these meetups together.
For sure.
And I actually didn't get a chance to chat with you beforehand. So things have been so crazy lately. I don't have a slide deck or anything prepared, but I thought I would just kind of talk a little bit about my journey, where I am now, what I've been working on.
Okay. Yeah, that's
and see if it
great.
resonates with anyone.
Is there how's everybody else doing out there? Looks like we have a couple more people. How's it going, Joel? A little quiet out there.
It's going great.
Awesome.
Yeah. How are you doing, Justin?
Doing good. The market has been pretty wonky, huh?
Yeah, very.
I didn't trade this morning. I was busy, but I got back to the charts and it was like, I'm glad I didn't trade this morning.
Yeah.
At least on the S&P. I'm assuming that, well, yeah, the NASDAQ looks almost exactly the same.
However, it did seem like some opportunities there. You know, I know you like the 512 tick and looking at the 20, you know, especially when it went directional.
Oh, yesterday for sure.
Yeah, that it went back to the 21 and the 34 EMA quite a few times, you know, when it was at a nice angle, like about 45 degrees up and everything. And
yeah,
the price wasn't that far, you know, from the 21, and then it would come back. And it's like, wow, that's a couple great opportunities there.
Yep. Yeah. How about Vince? Vince, are you brave enough to jump on the mic? I don't remember if we met before, but and Soul as well. Just if you wouldn't mind introducing yourselves and just tell us what you trade and where you're coming in from.
Hello, my name is Vincina.
Vincina.
Yes. I'm just coming in to watch because I'm just learning to trade.
Okay, awesome.
I just want to see what everybody's talking about.
Great, well, welcome.
Thank you.
Get some popcorn, enjoy the show.
Right.
What about Soul?
Hi, I'm Saul. Yeah, I just wanted to also just kind of listen and see, you know, this is my first time, so want to check it out. Thanks so much.
Awesome. Well, welcome. I'll throw my video up, I guess, so people can see me. This is, I think, what is this now? Our fourth or fifth session here. So for those who are new, especially Sol and Vincina who are here, and anyone else who's watching when I get this uploaded, you can watch the previous futures trading meetups on my YouTube channel. So you should be able to, if you're watching this right now, then you should know where to go to get that link to the YouTube channel. If not, I guess what I can do is, let's see here. I'm trying to think how to visually show this to you, but basically you can just send me an email, J as in Justin, T as in time. So JT and then futures, and then the number 1 at gmail.com. So altogether, JT futures 1, the number 1, not spelled out O-N-E. So JT futures, the number 1 at gmail.com. So if you have any questions, you want links to the previous meetups, just send them out to me, send that out to me. I believe I covered my trading strategy. We covered how I like to do my pre-market planning before the open for the S&P futures market. We had Wes on here who did a great presentation on auction theory and using volume profile and market profile to read the market and potentially forecast or at least get some biases for trading. And then we have today, we have Charles here. San Fran Charles is in, and he's going to give us a presentation. I think he said on how he uses specific NinjaTrader strategies and indicators, but he'll get into all that in just a second. I just wanted to kind of make a little bit of a formal welcoming to the meetup and just go over two quick things. First off, this is the Las Vegas Futures Trading Group. I also run the General Las Vegas Traders Group. So it's Las Vegas. What's the title of it now? It's just completely out of my head there. I believe it's Las Vegas Traders, something like that. That's the other trading meetup that is somewhat associated with this group here. So if you're not familiar, you can go on to meetup.com and just search for Las Vegas. It's called Las Vegas Day Traders. So look up that and join us. And we have our general meeting next week. So love to see you guys in person. Every meetup has been amazing. We go over so many great things. And if you're a new trader, it's a great opportunity to sit with some seasoned traders. We have people who've been trading for, I think, 30 or 40 years. We're, you know, trading for banks and hedge funds. So the experience level is impressive. So we'd love to see you come out, and don't be intimidated. We're all just regular people hanging out. And if you don't have any experience, that's okay. You'll learn a lot. And that's really why I'm doing these things, not only to hang out with other traders and shoot ideas and just kind of relate with each other, but also to bring in the new crowd, right? And get some, educate the newer traders. So just that heads up, we will have our general meeting next week. It's Thursday night, same exact time. Only difference is it will be in person. And that's one thing that we need to talk about, and that is, where are we going to be meeting up? Because I believe Hans are one of the members of Las Vegas Futures Traders and Las Vegas Day Traders. He is no longer has the office that we typically meet at. So I will let you guys know. We've got one more week until that meeting, so I'll try to get it worked out before then. And then the last thing I want to mention before I hand it off to Charles is I'm looking for more members. There's only 3 or 4 or 5 people here right now. And for those that are going to watch the recording, just sending it out there again that we're looking for other members to present and show us how you trade and the different trading concepts you use to trade futures. So again, it doesn't matter what you trade, to be honest with you, but going through specific strategies, how you orient yourself in the market, how you find specific trade entries, how you define where you're right, where you're wrong, how do you define where you get in, all that kind of stuff is great to share, because not only does it help you to solidify your process, but it helps others to get a new point of view on how you can look at trading the markets. So with that being said, we have Charles this week. Charles, thank you so much for presenting and taking the time to share your ideas and share what you do. So going to hand it over now to Charles, who's going to share his stuff. So go for it.
Thanks, Jay.
Yeah.
And hello, everyone. So I haven't really presented in front of other people, and so this is my first time. Hope everybody's doing well. And first off, I'd like to say, if there are any questions along the way, please either speak up or find a way to get my attention. Or Jay, please speak up if you see something in the chat and I'm not looking, so that I can try to answer while the question's hot and fresh and maybe relevant to what I'm talking about at the moment. So personally, I've been interested in the markets for a long time. I got first into them way back in the early 90s, mid 90s. And I got introduced by going to a computer swap meet which way back in those days when PCs were still fairly new, they have these big conventions, usually on weekends. Dozens or hundreds of vendors would all come together and sell stuff. And I'd go there and look through different vendors and parts and put PCs together and rebuild them and sell them to people. And I met somebody there selling mutual funds, if you can believe it.
Wow.
And so, yeah, it was interesting. I hope this doesn't come across in any negative way, but so it just turns out that the guy's name that I bought it from was Christopher Sham, and I guess maybe that should have been a key off to me at the time, but I was young and impressionable and gullible, so I bought those shares of that index fund or whatever it was, a mutual fund, and then that promptly just went nowhere for me. So then I got into other stuff and rare coins that were promptly stolen. So that was another win. And anyway, so I started looking at the markets, getting interested back in late 90s when we had the internet bubble. And of course, some of you may remember that at that time you could pretty much throw a dart and pick a winning stock, it almost seemed. And you had all these stocks like pets.com and things were just going crazy, much like nowadays with this new volatility is very similar to those early days of the internet bubble.
It sounds like the crypto environment.
It does, yeah. So I mean, back then I did have a little bit of money saved up because I got into computers early on, and I got into the high tech area. I never really wanted to program so much. I just enjoy solving problems, and my engineering background came in really handy, but I like helping people and solving problems. So I became a tech support guy, and that's pretty much my 30-year career. So semi-retired now, but it's always been fun to kind of try to pick things apart and see how they work. And anyway, so I had a little bit of money, and so I started getting into these tech stocks, and it was interesting. I'd buy 1,000 shares of Amazon and wake up the next morning. I just hold it overnight, wake up the next morning and watch it be up $2 or $3 and see a nice 2,000 or 3,000, and some days even $20,000 or $30,000 bump in your account. It was amazing. And then, of course, because I knew nothing about what I was doing, you could wake up the next morning and be down 30, 40 grand in your account in the blink of an eye. So I quickly learned at that point I needed to go and start learning and educating myself. And so moved from stocks and went through all the analysis stuff, techniques with Fibonacci and retracements, moving averages and trainings. That I never really wanted to buy stocks after those first impressionable down days of having stuff just move overnight when you're holding on to them, and then the internet crash that happened afterwards just turned me off on stocks for a long while. So then I started thinking, well, maybe I can buy things that are a little less sensitive but still have great return potential. So I started studying options and got into that. But then sooner or later, it seemed like all the meetings I'm going to were people spending 2 or 3 hours talking about all the multi-legged reverse iron condor, special spread, 6-wing butterfly type items, and that's all fine and dandy. It's just I never really just got comfortable with putting my head around managing multiple legs all at the same time and adjusting them and stuff. So that was good in education. So probably around 2008 or 2010, I'm guessing, is when I started looking at futures and figuring, well, I can still get the volatility I need, but I don't really want to be in the market overnight. So at the end of the day, you go home pretty much flat. At least most people I know do. And for me, the commissions are very low. And so I kind of found a home for myself there, at least for the next decade plus now, is working my way through learning about futures and trying to manage money and stuff like that. So, I wish I could be a success story and say, everybody, I've cracked the code and I'm magic and I know how this all works. It's not that quite the way I planned it to be. So I'm still chugging away at it. Anyway, oh, I guess I haven't even shared a screen yet. So let's start with that. So I assume now you can see my screen here. Kind of a similar, let me remove.
Yeah, looks great.
Okay, so this is Ninjatrader, and If that's a platform you're not familiar with, I apologize. That's what I've used almost exclusively for the last decade, so I'm fairly comfortable with it now. I'm happy to talk with people about it. And I'd like to start off saying that I don't have a big disclaimer screen, but all of this is my opinion only. I'm not a licensed or registered, and my thoughts and opinions are mine and mine alone. I have no interest in what sort of investments or trades you choose to place on your own, and all that jazz, right? The usual. I'm happy to give my thoughts and my impressions, but I'm in no way qualified to give advice or trading recommendations. So so you'll see that this is a typical chart. This happens to be the E-mini S&P. So we've got the ES chart here from this morning, and this is just a 5-minute chart. And so, there are various, I know this is the type of chart that a lot of people use, time-based charts. And those definitely have a good place, especially for getting bigger picture and looking at waves and retracements. And that's something that I'm still personally working on, is backing out my vision to higher time frames and such. And I'm working with a couple of friends who are more into market profile and things like that, that kind of give you the bigger picture, 20,000 foot view of where you're heading or could be heading potentially. But so I got interested in futures and found, with the low commissions and being able to kind of get in and get out, I found myself gravitating towards day trading and being more of a really short-term scalp type trader. And I know that's fraught with disadvantages. It's not the holy grail at all. But I like to be in and out and, as I say, earn a paycheck if I can, and be done flat for the rest of the day. And every time I talk to my mom on the phone, she's like, "Oh my gosh, are you doing okay with your investments and stuff? And how are you doing?" Like, well, I'm not holding any major stocks right now at the time, so that doesn't affect me. I go home flat in cash at the end of every session, and you start up, only be in the market when you want to be in the market. And I may have not mentioned, I didn't mention on this session before, but I think we've chatted a little bit, Jay, is I actually was born and raised in Las Vegas. I didn't ever really do much in the casinos. I went to California, headed to UCLA when I was 17, and pretty much never looked back. But I'm familiar with the casinos, and in my humble opinion, what I like to say is the stock market is basically legalized gambling, if you want to think about it that way. Because as soon as you walk in the door, you're on their turf. You're playing their game by their rules and using their deck of cards. So if you can find an edge, take it and work and run with it. But there's a lot of different ways to try to get an edge in this game. But effectively, as whenever you're in the market, your money's at risk, is my opinion. So I'm not a long-term investor at this moment, but I like to try to be careful and just take what I can get and go home, take some money off the table and go home, be green for the day if possible. So, there's, as I mentioned, there's all sorts of different charts, and I found myself really going through the different charting types. This is a bar chart with minute-based, 5-minute chart. There are range charts, Renko-based charts, volume-based bars as well. And I found, at least for me, it's no magic deal, but I liked the Renko bars really take a lot of the interim chop out of the market, because a Renko bar will only close. So really they're time independent. So here in a 5-minute chart, every 5 minutes, up or down or flat, the bar closes and you start a new bar. If you, with a Renko bar, and I probably should have brought up some slides or something, but with a Renko bar, it just depends on where the bar opens and how many ticks you've set the bar size to be, generally. And if it goes up more than that number of ticks, it closes up. And if it goes down more than enough ticks in the opposite direction, then it closes down and you get a reversal bar. But if it takes 3 seconds to do that, you'll get a new bar in 3 seconds. And if it takes 3 hours and the market's not doing anything, I don't need to see such such as it is, for instance, this little section right here between, say, 8:55 and 10:40, that's, there's a little bit of time in here where the ES didn't really go anywhere. And so that movement kind of gets, depending on the size of the bar, of course, that movement gets absorbed into just a single bar. So if the market didn't move up during that time, I don't need to see a new bar formed. So I'll minimize or just close this chart. Oops. Let me kind of jumped ahead there a little bit. So here's the similar time frame, kind of crunched up a little bit. But this is the Renko bar from this morning from the ES. And you can see it's only a 1 tick bar. It's a 5 tick or 6, actually it's a 6 tick bar size. It's a modified Renko bar. But when price moves, in this case, for this configuration, 1 tick in the direction of the bar, then it will close down and you'll get a new bar forming. Now, if it doesn't move down or it stays flat for a while and oscillates up and down for a while, it'll just stay on that bar and build it up or down. If it eventually closes in the opposite direction, so if we were here looking to go up, we closed it 1 more tick, we started the bar here, but then we didn't go any higher. And then all the subsequent trade activity drove the bar down until it exceeded the opposite number of ticks in the opposite direction, the same number of ticks in the opposite direction from the midpoint. And so then you go 1 more tick. In that case, it would have been 6 ticks down from the middle of the bar. Then it closes and you get a new bar down, a reversal bar in this case, changes direction. But it kind of smooths things out and lets me see, for my preferences, a little bit of a smoother market. Now, of course, with any Renko bar or almost any Renko bar, you have to be careful because they are false bars or phantom bars. The only true price action is in the direction of the close. So if a bar is green and it closes up, you know that price went up at least 1 tick. And you know that it started at the top of the close of the bar just prior. But you don't have any clue about what happened inside that bar. So you don't know if we ticked down at all or went all the way to the bottom of the bar but never broke the bottom. You have no idea what action happened inside that bar. So that's one thing that Renko bars hide from you. Now, when you do see a tail on either side, a wick on either side, such as, I guess I should probably blow it up a little bit more. I know I have a big monitor here, so I apologize if it's kind of compressed on your side. And if it becomes too small, let me know. I can zoom in or try to make it more focused for you.
Looks good right now.
Okay. So for instance, on this bar here, we can see that price action actually did trade down because we have a wick. And that shows us that not only did we get to the bottom of the bar, but we actually broke the bottom and price went down, but it wasn't enough to close it in the opposite direction. And then in this case, we had buyers coming in since this last pivot high. Buyers, the sellers came in for a few bars, then buyers pushed them up, and then we continued to push them up. And at this point, a lot of selling activity came in and the sellers were successful in driving the price down, but not reversing. And for whatever reason, once it got to this point, the sellers vanished or lightened up and the buyers took over once again. And then buying activity not only was strong enough to push it back up to the top of the bar, but actually to close higher. And so you get now a new bar closing after that. And it went a few more ticks before eventually those sellers came back in and joined the party again and drove it back down. Subsequently here. That look is actually a signal that I've programmed into one of my setups. That's something I like to see. There's actually, so my name, so I'll hint at one of the things that I've done so far is, at least in the Renkos, you don't want to be too far away necessarily from the pivot, because the further you get away from where price action changed, the more likely you are that whatever pressure there is that's pushing you will exhaust. So the further you get away from the pivot, the more likely we're going to turn around at some point. Now, I know that's been pretty crazy with the price action lately. So it's easy to see these massive moves. And yes, there's some crazy moves that are being driven by the algorithms and the big boys right now. But in general, the further you get away, the more likely that you'll exhaust at some point in reverse, at least for a short time. But when you have relatively near the point of the turnaround, when you have a wick that drops below the bottom of the bar, but then again, as I explained, we had some sellers come in, they pushed price down, but then the buyers came back in and not only were able to drive the price all the way back to the top of the bar, but closed higher. That indicates to me a short-term good amount of energy or momentum on the buying front, in this case buyers, because it closed up. And I like to liken that sort of a situation to a kid with a slingshot. You're holding the slingshot there, and if you want that rock to fly, you pull back on the slingshot until you get it back as far as you can pull it, and then you let go, and it propels the rock forward, and you kind of get this momentum burst often. Not always, but often you get a bit of a momentum burst, and you get a push after it. So, nothing too mind-blowing here, but you can see that here we had the same situation. We're pushing up, and I believe we were getting higher highs. So we had higher highs moving into this. So in general, the momentum, the trend was up. We get another leg, we pulled down, we come back, start going, and then we get this fight, this battle between buyers and sellers that actually ends up in the buyers winning. And that propels all these people that were down here thinking it was going to go down, who were selling into this movement, need to get back out. So at some point they're going to have a stop, because they're thinking there might be a reason to reverse here, so somebody wants to sell. Now, when it closes up and continues going the opposite direction, at some point they have to get out, and that fuels the movement. Typically, again, nothing's perfect, nothing's always 100%, but you get that reaction to the reversal and then the quick reversal again, and everybody has to change direction and start either going the same direction or buying back the shorts that they were selling. And that adds into the fuel to the fire and pushes it higher in this case. Here's another one. It didn't break very much, so a little bit less of a push down, but it still broke up. And then we see that there was a good reaction. Now up here, again, remember the one thing that should be mindful whenever you look at this sort of a situation is we're pretty far away from where the whole momentum move started. So again, it's all relative. I can't say it's 3 bars and 5 bars or 20 bars, but the further you get away, the more likely that eventually you will have a bit of a turnaround or even a reversal. So again, we have one here that slingshots, but it only went for a couple of ticks, 2 or 3 ticks, and then the sellers came back in and more successful in closing the next bar down, and then we had a bit of a movement away. So that's just one thing that I've seen, and I like the look of that. So it's something that I do look at along with other indicators to help give me some guidance. Thank you, Joel. So for the question here, I'll try to put questions somewhere in here where I can keep an eye on things. So this is not the VWAP. It's actually something that I've put on the charts based on some information that somebody told me long ago. And it's just another moving average. In this case, I believe it's an exponential moving average. And the secret sauce here, there is no secret sauce. Every moving average has its own benefits or whatever. There's no magic number. This happens to be a 450 EMA, and allegedly it's something that the higher time frame players or bigger money may keep an eye on. Now, if that's actually valid, and if it's stocks or for futures, I don't know. I've also heard of it created. It's not exactly the same line, but it's very similar. Is the 50 moving average is a number that everybody knows. Your 50, your 100, and your 200. Very common moving averages that, because so many people know them and tend to put them on their charts, just like Fibonacci, in many ways they tend to become self-fulfilling prophecies, where you come down to the 50 or the 100 moving MA or the 200, and you'll see often price kind of gravitate and then move off of it, just because it's such a popular, well-known number or utility that people often put on. So if you have a 50 moving average and you feed it into another 50, so it's basically a 50 of a 50, simple moving average or exponential. I don't think I've tried with exponential, but you can do the same thing. You can embed an indicator in Ninjatrader, so you can make a 50 of a 50. And that's not exactly the same exact line, but it's very, very close. And maybe there's something to it. I don't know, because I've heard two different EMAs referred to in two different, totally different constructed ways that are very similar to each other. So maybe just something that, maybe something you take away from tonight that helps you, or you find. So again, I just use it for sort of like a higher time frame. So I didn't remove that off my chart here, and it is on there. It's nothing special, but I hope that answered your question. You're very welcome, Joel. Now I do have VWAP on here. So this is the base kind of chart that I've become fond of in recent years. And I started looking at these with a different trading system that I had purchased that mostly based off of Renko Bars. And I kind of got used to that for a long time. There were some things in that trading system that were limiting for, I really like, and I still subscribe to and use the system on occasion. But there were some limitations the programmer put in with things that you could do with trying to automate some of the stuff. And I thought to myself, well, it'd be really nice someday if I could find a way to do similar, but be able to control a little bit more actively some of the conditions, or customize things a little bit more, or even get some I don't like to use the word auto entry, but I'll say entry assist type tools. So I have some entries that I like to look for. And I've thought, well, I keep seeing these things, but often I'm not seeing them in time, because by the time I see them, they've happened and I missed it. And so I kind of set about in the back of my mind is like, yeah, I'd like to keep on using these kind of bars, these charts, similar things, but I like to find a way to maybe give myself the opportunity to do things in more of an assisted way someday. Now, Joel, I don't know, I'm not trying to shill any particular website, but I would like to be up front with everybody that I did come across a website, just a guy that I came to know that had built indicators for himself that had the exact same look as this. I don't know if it's okay. Is it okay for me to mention websites and trading specifics and things like that? Jay, I'm sorry, Jay.
Sorry.
Maybe. Oh, there you are.
Yeah, of course. That's up to you. I don't
Okay.
mind.
So I just want to be clear. I'm not trying to make this a sales presentation. Not at all. I'm here to just educate or give my thoughts and how I like to look at things. And I'm just being upfront that I'm aligned with a partner now that actually has a system and a website, and I've been working with him for a couple of years now to kind of build things up. So all the stuff I'm giving is just my journey and how I use things today, and I hope that it's helpful for folks. And if anybody ever wants to learn more or talk more, I am happy to do so, and I actually do trade or try to trade, even in sim right now sometimes, but I do try to trade every morning, and I have a room where I open things up, and I'm happy to have people come in and ask questions. I don't feel like I'm an educator, so if somebody wants to come in and ask me all the ins and outs of Fibonacci or market profile or all this stuff or delta analysis, I'm happy to talk about things, but I may not be as knowledgeable about those, or not in an expert kind of way. Okay, so let me see. I'm going to just remove the drawing objects here. Actually, what I probably will do. So to bring things kind of just into the light a little bit more, just up front, then what I'll do is I'll just pull over. Again, this is just for open and honest communications. This is the website that my partner put together or had already running when I ran across them, because I was out there going to meetups and listening to people and trying different programs and different programs. And for me personally, what I found, unfortunately for me, is I can't say I've bought every system out there, because I certainly haven't, but I've bought a lot, especially in the last 12 years. I've paid a lot of money, and I hate to think how much I've spent over the last 20 years with trading systems and indicators. I'm an indicator junkie, and I think that's the trap that many of us find ourselves in, is like, I just one more indicator on my screen or one more magic dot or thing is going to make me a better trader. And I've really found, sorry, it got hidden behind the chat, folks. Sorry about that. It's so the place where I'm aligned with right now, I just am unofficial partners with T7TradeLabs.com. And sorry, I'm kind of talking and then not remembering where my train of thought. But I've bought a whole bunch of things over the years, and some of it's helped, and some of it, most of it has been, you know, I'll take it, I'll try it. But many of the rooms that I've been out there and trying to adapt myself to somebody else's approach to the market, for me, has been difficult. And I love that, you know, Jay's here putting out meetups like this. People can share knowledge and information, describe how they approach things. And I've been there, I've done that, and at least for now, at this point in my life, I've found that trying to follow somebody else's approach or learn somebody else's approach, yeah, for me, what works better is finding something that speaks to me. And I don't know if that makes sense, but I've tried to adapt myself to other people's ways of trading. And for me, it's been a very difficult journey. So otherwise I probably wouldn't be here. I'd be, you know, making money and trading whoever system is out there.
Charles,
so-
I just want to say that that's probably the natural progression, is starting out trying to, oh, he does what, look at what he's doing. He's making money. Let me try to figure out what he's doing.
Yeah.
And then you kind of you don't mesh with it. So then you find something else until you find something that works and resonates with you.
Absolutely.
You know, and
yes.
that is typically bits and pieces of all the other things you were interested in, and just kind of creating your own custom way of reading the market.
Nail on the head, Jay. Yes, exactly. And I think we're all going through that journey. And the interesting thing is, you just helped to clarify, I think, is that journey is very individual. What works for me may not work or make sense to another person, or it may just, they're going to not be able to trust it or believe it, and they're going to find difficulty applying or sticking to whatever rules are there. And so you have to adjust. Even if somebody else's system, you adapt it to what works for you or what makes sense to you, because until you believe in something and trust it, which really, it requires a lot of effort. And that's when you get into the whole psychology of trading and a whole lot of other stuff that I'm still working on myself. I'm not a perfect trader, and I'm still making my way day by day. But until you trust something and really believe in it, it's, you know, you're going to keep doubting yourself, and you have a down day, and you're going to doubt yourself. You're going to start fudging your stop loss. You're going to start moving things around or adjusting or making excuses, and next thing you know, you're not even following that system anymore. You're just kind of doing you're just kind of flailing a little bit, and then looking for the next system to kind of put you back on track. Anyway, so it's been a long journey for me, and I, as I've described, I kind of have now settled, at least for the term. I like the way that the Renko Bars kind of smooth movement and market thrusts, if you will. So much like trying to think of the name, there's this Wyckoff. A lot of Wyckoff has thrusts and coils, or whatever those are called. You know, I like to look at the movement of the market and try to see how's the market moving. Is it moving in waves, or is it just kind of chopping around? I like to see waves, and I like to see movement in one direction. You may have heard it described, if I go back to my chart briefly, that I guess I'll bring up like a quick drawing tool here, perhaps maybe down here, something like that. But you'll have, I don't even know, do I even have like a pencil in here? I haven't installed any other drawing tools. Maybe not. Yeah. Okay, well, but you'll have market action will generally I'm just trying to think if there's a better way to kind of think how I'm doing. You'll have market action will kind of, oh, yeah, that didn't work. Sorry, folks. But in general, markets move from consolidation. Markets agree on a price, so markets will move around. Maybe it's just better to find some examples on the chart here. So let me erase this. Start again. So markets will move from imbalance to balance. So, just kind of in a very generic way, up here we had kind of an imbalance where we had buyers coming into the market and then sellers drove it back down into sort of this region at the bottom here, where for a while we sort of found in some way to think of perhaps is that we found agreement that in general this is a fair price. So price moves looking for, is it too high or too low? And buyers and sellers negotiate, and that's what causes markets to move. And then at some point we kind of get to an area that markets generally come to, if not perfect, kind of wavering agreement that this is fair value. So markets kind of vacillate back and forth. You form a bit of a range, and then at some point, that energy shifts, and markets will then move out of that region again, searching for fair price, and then they'll try to come back to another area where they'll come to an agreement that, in general, here's fair price. You go from consolidation to expansion, and back into consolidation, and then back into expansion again. So that's kind of what I've been trying to look for and adjust to, and keep it in the back of my mind always. Anyway, I don't know if that helps folks, but it's something that I've kind of kept looking for and growing on and trying to use in part of my review of the markets when I'm in the day. So I like to see markets that are moving and expanding. Again, nobody likes chop, and you only know it when you're in it, unfortunately. I don't have a magic indicator for that, but when you see this sort of vacillation, oscillation back and forth, and short starts and then reversals and short starts and reversals, then that basically, you might want to stand by or look for a different market that tends to be moving, and then find what's moving. And if nothing's moving or nothing's giving you that nice oscillations and waves, then don't trade it. Try to stay out. So wait for things to kind of repair, refresh a little bit, and get into a bit more of a rhythm where it's flowing, or you're getting waves and movement. So briefly then, going back to, so I was on this journey looking for somebody, and I came across, actually it was another trading room that I was in. Somebody who was actually the head trader there had left abruptly, and I didn't hear from him for months. I didn't know the guy, so it was just, I really liked the guy. He was trading well, and suddenly he was gone, and I never heard what happened to him. And then out of the blue, he reached out to me, and his name was Tage. And I said, hey, I knew what you were doing in the other room. I liked your approach, and I was, I just sorry that whatever things didn't work out. And so he introduced me to T7 Trade Labs, which is where he had landed after becoming, kind of close with Troy, who's the owner of that website, or that methodology, that system. And so I went to that room and started following him. We had different approaches, but I still like, they used very similar kind of methodologies to what I was looking at, and they'd built some tools around leveraging this sort of market movement. And I started learning and listening and watching and growing and working with Tage and with Troy as well. Unfortunately, about 2 years ago, Tage, in very short notice, it was a little under 2 years ago, he suddenly came down with cancer out of the blue. And it was very heartbreaking to hear and watch him through this. And less than 6 months later, he departed. Very, very sad. And it kind of tore up the room a little bit too, because what's a room with the methodology but nobody to do it or just demonstrate it. So I liked the methodology. I decided that, well, I'm going to keep on learning and trying, and that's what I've been doing ever since for about the last year and a half. I spoke with Troy and I said, I want to stay on here and try to see if I can get all the tools that you keep on using the tools you've provided, but see if we can figure something out and I can continue to leverage this and grow it and see if we can make something work that makes sense. And if anything that I provide here makes sense, then I'm happy to talk with you. And anyway, that's where I ended up. So I'm still with T7 Trade Labs. I'm not even an official partner. I'm just a guy that hangs out in the room and tries to show and use the bars and the methodologies and the indicators. And I've improved and created some indicators myself and improved on what they've had as well. So that's part of what I'm here to show is what seems to be working for me today, or at least what I'm still working on. It's always a process. So this is sort of the basic chart that, whatever market you may want to put on, but this is the ES at this point. And to make it easy, I just kind of removed some of the things off the chart because my charts can get a little bit busy. I'm a recovering indicator addict, and I think I always will be. So it's easy for me to get too many things on the chart. So I didn't want to give you guys an eye test right off the bat, but sort of I thought I might go through and start building. So I did leave this 450 EMA on there just because. But the next thing that, and don't let this list overwhelm you, but what I should do, and it's not clear because it's actually not on there at the moment. It comes on when I put on the strategy. So I've actually worked on indicators and strategies that hopefully will, if it resonates with anybody or you're curious and want to talk more about it, I'm happy to talk more. So here's part of the indicator list of what we have. All these T7 indicators. There's a bunch there. I don't use nearly all of them. I'm going to just add this one, this EMA trend. You see the default here is 196. I like to joke and say, well, it's a 200 EMA, but we get in four ticks earlier than everybody else, or whatever. It's funny. For whatever reason, that's actually what Troy created it and defaulted it to, and we used 196. So it's basically a 200 moving average. I'll just go ahead and add that here to this, and you'll see that the 200 moving average. And the funny thing is, this is a Renko bar. So if you put it on a 1 minute bar, the average, of course, will look different. The moving average. If you put it on a 5 minute bar, the moving average will still look different. But I just found it kind of interesting how on this type of a chart, or at least for the bar sizes that I tend to use, that it is interesting that it's not perfect, but it's kind of intriguing that it has a reasonable affiliation with trying to give you some guidance as to which way the trend is moving. And when you're moving in that trend, and this particular indicator is just colors the trend line according to the slope. So when it's sloping down, of course, you're moving downwards, the trend's down, the general trend is down. But when we come back to it, is sometimes in the region of, and that region is, it's a generic thing. It's like a support zone. It's not an exact value. It's a region. So you might not even hit that support line. Market might take off. It might come within 5 ticks of it and take off, or it might break through by 5, 6, 7, 8 ticks and then come back. But it's a general idea. So I kind of liked what I was seeing, at least initially. I was like, huh. So every time we kind of get down here, we come back and revisit, and we pivot back off of that 200 EMA, or the 196 in this case. I'm like, oh, that wasn't a half bad. I mean, yeah, it's kind of choppy and sloppy in here, but I can kind of see that. It's not magical, and it doesn't have to take a lot of my brain power to kind of have it pointed out or see it. Okay, and here again, we broke through by a few ticks, but in general, the market was still pivoting down. We had lower highs and lower lows in general, and then we came back up and revisited, and we came back up again. I'm like, oh, there's something in there. Like maybe I can try to get a little bit of that sandwich, meet in the middle. I'm not trying to get every tick. Don't have to get in at the beginning, and I'm not ever going to catch the bottom. But if I can get the meat in the middle of the sandwich and try to get a little bit of a meal out of it, then that's okay, and I can deal with that. Now, I will say there are only a few people in the room here right now that even come in on a regular basis. Some people still use the system, but they've gone off and just customize it and use it on their own. They don't even come into the room anymore. So it's not some massive room with 50 or 100 people in it, or, you know, some days it's just me, and that's okay because I still trade. But it's nice to have people around and have someone to talk to. And so, because trading can be a very lonely business. I'm not sure, Jay, if you agree, but I found it to be, you know, I always thought that I was, you know, pretty independent, and I was like, yeah, I can do things on my own, self-starter and all that stuff. But yeah, sitting in front of your computer in your pajamas can get kind of lonely after a while. And I've been in a lot of rooms where you have 200 people or more, and there's chats that are just off topic and going all over the place. And not that we don't talk about other stuff too, but it was just really distracting. I'm like, okay, well, I don't need that either. So I'm glad we're not there. I don't want to have a chat room with everybody and their cousin putting in what the weather's like in wherever they are. I you know, trying to keep things on topic more or less. But anyway, so, you know, that's what the beginnings of this, you know, here we're still kind of in a transition phase. Yes, the kind of the trend hesitatingly is looking like it's up. We came back again and retested that 200 from the upper side. You know, and this is still within the ranging of the prior pivot. So I'm not saying this is a perfect time to jump and just load up the boat long, but it was kind of interesting. So, and I didn't cherry pick this. This is just this morning going into the open, just before the open. So, and it doesn't mean that, oh, it doesn't always happen like that, but I just thought it was kind of interesting. And sometimes we never even come back to the 200 and press, you know, you just have these natural waves where the market gets a push, little consolidation, another push, consolidation, another good push. Here you get a little choppy, and then we kind of push again. So we didn't even get near, you know, there's so much momentum in this case. We came back twice and retested, but once we got right out of the gate, which is not unusual right now, the market activity, as anyone who's trading the futures or looking at watching the markets, is insane. I mean, if you've been trading for more than a year, I'd say, if you think about what the ES used to look like a year ago, with the way that it moved, as compared to, say, the NASDAQ, which was insane. It's always been insane. If you ever watch the NASDAQ, it just moves like grease lightning, and I can't trade that. But nowadays, this insane volatility that we have, even in the ES, which used to be, you'd be lucky years ago to have like a 30-point day or a 20-point day on the ES sometimes. Now you've got 20-point moves within minutes or even less sometimes. Right now, it's ridiculous. Anyway, so you get this momentum out of the gate, out of the open here, and there's so much momentum in the market, so much buying pressure that we can't even get even reasonably back to where we came from. We're just getting continued buying interest, and then it pushes up. Eventually it's going to come back, but we don't know when that's going to be. But you can see there's a lot of movement. And so these waves, once you start to spread out, you see that the 200 here, I'm going to refer to it as the 200. It's 196 again, but you know, just what I'm plotting. But in general, the 200 is above the 450. So okay, so we've got a trend up in general. You can see that. When you're down here, when you have mixed information, like the EMAs, the 200 is below the 450, but the price is above. That's kind of a transition zone, and it shouldn't be too difficult with just the simple stuff that we have here on the charts right now to say, oh, well, everything's kind of backwards. Price is above the 200, but we're kind of below, or the 200 is below the 450. But you know, it's not surprising here that the market oscillates and vacillates a little bit here, trying to figure out, are we going to go back down? Are we going to go back up? What's going to go on? You know, there was indecision, a lot of back and forth. But once we kind of, I've heard people referring to this as getting spread between the EMAs. And we also have, you know, you can put 50s and 100s on there. And actually there is an indicator that's on the ecosystem that I've added onto my charts that for just that. And that does add a little bit more to the screen. But there is a free indicator out there on the Ninjatrader ecosystem. And we can find the link and post it for you guys if you're not familiar. But Ninjatrader ecosystem, there is something there called this Blt Trigger Lines, if anyone's interested. And all it is you give it two different EMAs, or in this case, it doesn't even have to be an EMA. You can select from EMA, Hall moving average, a simple moving average, all of the other things. I don't even know what most of these are, double exponential moving average or whatever they are. TEMA, VEMAs. So you can choose and then put in the value, whatever it is. And in this case, we have what we were working with. So instead of a 200, we had a 196. So half of that's 98. And half of that again, so instead of being a 50 is a 49. So you can already see the implicit value in our system because we're ahead of everybody else, because instead of a 50, we're using a 49. So go team, right? It's magic. Of course, I'm kidding. But anyway, those are the numbers that I happen to put in. And then in this, and then all it does is it colors the regions between those EMAs. So when the EMAs are crossed up, it highlights them, in my case, cyan. If they're crossed down, it highlights them red. And it can kind of make the charts a little bit busy at times, but I'll add it here. And, oh, sorry, I didn't add it. Need to make it visible. So here's the Blt Trigger Lines, make it visible. And now we can see a little bit better. Why might I have this on my charts? At least for me, again. And now this is kind of a good example, just happens to be because we had a nice trend up here, nice moving trend. We're not chopping too much back and forth. But when you do see that, when you see the ribbon, or whatever you want to call it, the rainbow, the ribbon, kind of squeezing, I call it pinching. When you see it getting thinner and thinner and thinner, kind of like a crab claw, that indicates to me that maybe we might be transitioning. You never know. Now, when we're spread out and everything's moving the same direction, that's showing interest and momentum in the market. So we have the 200, then the 150, they're all below each other, spread out, they're all moving the same direction. We have continued push down. Now, when market reverses and starts to cross or come back to that, then we get this pinching motion in that cloud. Kind of gives me a little bit of hesitation. I was like, yeah, I've seen great times where it comes back and then moves really nicely off of that like it did here. But often that gives you, it could be a precursor to market might be in transition here, or might be entering a zone of transition or complete reversal. You never know. So just be aware. So as of this point, we can see that the 200 EMA is kind of flashing Christmas colors, red, green, red, again, green, red, green. It's underneath the the same colored bars, but it's flashing back and forth. So this is a chop zone by just looking at the coloring or the vacillating color of the main EMA. And then we do see that the no longer are we crossed down and all moving the same direction. We get pinching on the 50-100, and then we actually get them crossing. And it doesn't surprise me in this case. It's a perfect example. Again, I didn't cherry pick this. I just opened the chart and said, let's come back to the open this morning or before the open. But we have here is, these are crossed up, but they're still below the 200. So what does that tell me? I don't know which way I'm going. And sure enough, in this case, the market happened to agree with that analysis. And we get this kind of market negotiation going on, where they're trying to figure out who's in charge here, the buyers, the sellers, nobody knows. Finally, the buyers win, and we're still crossing over here. So this is an aggressive place. I did highlight that. Oh, look, we came right back to the 200 here 3 times. Well, yeah, those are fairly aggressive given this analysis, and it could have easily just come against you. We push away from it, have a little hesitation, get a bigger push, then we come back. In this case, we came back to the 50. Remember, this is the 50, this is the quickest one, and then we have the 100 or the 49.98. And in this case, those tend to be aggressive support. Now, they're much lighter. The further you get away, the much less resistance they actually provide. But initially we bounced right off that twice and pushed back up, trying to make a new high, failed to make a new high. And then the sellers came back in, which shows us implied weakness near term. And sure enough, we break the pivots, the low pivots, and come all the way back and vacillate, and we go right back to the 200. Okay, so now we have this pinching motion again. And sure enough, we find failure to launch here a couple times, or at least once. We're trying to get up, but we didn't break down. We didn't get below. We're still crossed up. Everything's stacked. We've got the 200 is above the 450, and the 100 is above the 200, and 50, although it's trying, is, you know, pinched, but still above. And we get a nice push off. So some, you know, aggressive traders might try saying, well, this is it's a setup, it's not ideal, but whenever you get this kind of a movement back, you're going to get pinched EMAs. And that's just you have to choose your entry, choose your stop, and run with it and decide what your entry is. At this point, we get far away, we kind of move back, and we can see we have so much momentum, we can't even go back to the cloud. We bounce off, more or less bounce off, move away again, come back a couple times, bounce off, and then make an extreme movement way far away. Now we came back. What happened here? We cut right through, well, we did have a slight bounce. You can barely see it, but there's a bit of a wick on that candle right there. So we did have, at least we know here, price action tried to push up, failed. And this is sort of a reverse slingshot. What do we have? We've got a pretty decisive move away from this topping area here where we had up, down, up, down, up, down negotiation, buyers and sellers trying to come to an agreement. The sellers took over, broke the pivots. We have momentum down. And this is a far away, so it's not saying it's an ideal entry, but we're just saying we know we have momentum pushing away from this massive move up. We get a little short-term push up. Buyers totally fail at this point, and we close down. And then once again, the sellers just take over and ram it right back down. So, you know, that's a potential situation that you can look for. Do it on your own if you want, if it interests you. They don't all work, but you know, that little bit of slingshot action where you have continued closes down, you get a bit of a pullback, and then you still get a continuation in that direction. That's basically showing short-term momentum. So maybe that helps you. Now we were right into the clouds here, so that's not an ideal situation. These are implied support resistance in a way. We sliced right through them. So in this case, the 50 and the 100 didn't do anything, or may have slowed it down. We don't see that in wicks here. Came all the way back to the 200, basically to the tick here. Then we saw buyers try to come into the market. They were rejected once again. Buyers try to come in, rejected once again. Here they finally come up. We're able to close up to the next bar, and then we get the next movement off for another bit of a push. Now things are pretty unsettled here. And are we in chop? Well, I mean, you have to decide for yourself. But again, we see things crossed the wrong way on us and really thin and compressed. And so at least we get short-term hesitation on the next move out. And we try again, we push out. We don't even break the prior pivot. And then we see we're still continuing to get this chop sandwich in the EMAs. We try once more, fail, and then we break down. So now we're kind of in potentially a reversal or transitioning phase of all that movement up. And we don't know, but we break down, we come back up, pierce the top of the cloud. Nothing's aligned yet. We're still, the cloud's above the 200. So we're kind of in this almost inverted situation. And you can see how choppy it was. We tried to get back in. Buyers kept trying to come back in, getting pushed away and rejected each time. After this long bar here, this super long bar, they took out the bar prior, which is an even stronger. Typically, if you ever see it, is if you have back-to-back tails, and where the second tail exceeds the previous tail, up or down. If you see that sort of a railroad tracks or 1-2 punch, whatever you want to call it, just where it exceeds, they're taking out all the people that were still thinking they were going to go long here, and more people say, well, we broke the bar, so now maybe we're going to go back up, and they still reject that, and then still manage to close down. Is usually you can see that in this particular case, yeah, we have a little bit of a hesitation there where they brought it back up again to the prior pivot low once again, and then got rejected. And then we had still this continued, a bit choppy, but had a pretty good continued push down. So, and what am I doing during all this? Well, I'm trying to make little tiny sandwiches, potentially. And I don't take all these nearly. That's one thing is, yes, I admit I'm a scalper. I'm a short-term trader. A lot of these you can get wicked out or chopped out depending on how much you're using for a stop. And with the current volatility, these moves happen in a blink of an eye. So you have to be careful. But again, those sort of little momentum moves, and work pretty well, even in this market sometimes. And you can see that there's ticks to be made. Depends on what your targets are. Again, if you're comfortable with, in my case, often I have a bigger stop than target, so my risk reward ratio is reversed. So, you know, if I do take a loss, it's going to be a lot bigger than my typical win, unless I stretch my targets out. Usually by about 2 to 1, at least on my first targets. So a loss can hurt a lot. But again, I'm looking for 4, 5, 8 ticks sandwiches in here to grab the meat in the middle and take some off and maybe have a runner, and then see what we do with the runner. But that's sort of my basic approach to kind of the foundations of the type of bars. In this case, they're the T7 bars. These are just, again, modified Renkos, and you can find very similar or probably same with configuration out there on your own. But I find them insightful, and I like some of the things that tend to pop out to me. So that was, you know, kind of the introduction to one of the, we sort of have trend trades, which are moving off of these cycles, trying to get close enough or basically back to the 200 and then pushing off again. And then we have these little that I quote unquote invented with slingshot trades that you're looking for basically just a push with a bit of hesitation, but in the momentum play, you're looking for not a long-term target, but you're looking to take a little bit off with these momentum pushes, potentially in those slingshots again. So going back to some of the things that I have on my charts on a final day. Okay, so I put VWAP on there. I don't know if anybody uses it. It'll probably just add one more dotted line or dashed line. So I'll leave it off for now, but I do use order flow VWAP. It's built into Ninja. So, you know, that often can be a really good area when you retrace back to it. So if you see us getting far away from and then coming back towards the VWAP, often you'll see price hesitate and oscillate around the VWAP. Not always, but something I think is worth keeping an eye on. We already have the EMA on here. I'm a Bloodhound user. That's a paid product that allows me to create signals or highlighting on the screen for different situations I like to highlight. The opening price is just showing this yellow line up here. That's just showing me the current price level of where price currently is. The trigger lines I've already explained. Those are this cloud. I call it the cloud or the rainbow or whatever you want to refer to it. Price line does the same thing. I think it's actually stable. It's on there, but yeah, it still shows the price. Tick refresh is built into Ninjatrader. It's just something you can configure to show. By default, Ninjatrader kind of scales back the refresh of the bar by default. So you don't need to have a high-powered graphics processor or something. And so you'll see the bar kind of ticking up and ticking down. But if you were to watch a time and sales tape or if you open the DOM on Ninjatrader, you'll see price, especially on the ES, but these kind of days, you'll see the price kind of ticking up, ticking down, ticking up, ticking down. You don't see that on the actual price itself. If you want to see a little bit more of that, you can add the tick refresh to your charts. It does take some cycles, but it's not aggressive. But you don't want to really set it too small, or it will it could have an impact on your CPU or your charts. So I'm not recommending it. I'm just saying I did put it on. I put it on 200, which is a fifth of a second, 200 milliseconds. I forget what the default is for Ninjatrader's refresh. I think it's maybe like half a second or something like that. So I'm making just a little bit quicker so I can kind of get a read when I'm in a position, like to look at the bar and see a little bit more how it's moving. If you see jumps in the bar or how it tends to move. So I put that on there. What else do we have? Prior day, open, high, low, close. I'm just going over the generic other stuff, the free stuff that's available out there. The one thing I don't like about this, and I may make my own sometime, is they don't label the lines. And so I have all these different colored lines and I can't remember which one's which, except for the high maybe is red. And I'm like, oh, okay, that's yesterday's high. But otherwise, when I see the blue and the light purple or whatever, I'm like, I don't remember which one was that again. They don't put any kind of a label on the side, which frustrates me. And we do have that in one of the indicators that my partner built, which is the T7 internals, I believe.
You could probably customize that code to do that.
I probably could, you're right. I do have a programmer. I work with the programmer that makes the T7 stuff, since I'm happy to work with those guys, or Troy and my friend. And he's a Christian. He's a great guy, and we've really managed to lead things off in a really good direction. And I'm happy for his acquaintance, if much less the tools and the things that he's tried to do for it. This is all just for his own trading, and then he kind of just opened it up. So, and he and I have totally different styles, as I may have mentioned. He comes up with levels and zones, and when he's in the room in the morning, usually he'll post, if he's had time that morning to create them, then he'll post those levels in the chat. And the levels he comes up with, I don't know the formula or what he does, but he looks basically back at prior days, looks at market profile, highs, lows, Fibonacci's, and he kind of looks for just areas that have interesting confluence, and then puts a usually between 4 and 6 or so levels out, that if we do visit those during the day, actually I've been pretty amazed many times how the levels he puts on his charts are just to the tick sometimes, that are just crazy. Like, you got to teach me how you do that sometime. But so that's just a fringe benefit of being in the room. If and when you post those, they tend to be interesting. Okay, so along with all this, well, let me see. So what we have,
We're
we do
gonna
have the
want to
T.
try to wrap it up soon, just because we're getting a little late.
Oh, are we
So,
already?
here.
I'm so sorry.
Oh, no, you're fine. Just, if you
didn't-
have just kind of some final thoughts.
Oh no, yeah, I'm sorry. I got to talking. I didn't realize it had gotten so late. I apologize, folks.
Oh, that's okay. No,
No,
no
because
worries.
I haven't even shown what I was going to show, but okay.
Oh, yeah, no,
So-
show the last thing you want to show, but I just try to wrap it up in the
Okay.
next few. Yeah.
Okay, I didn't realize. Yeah, so we have, so the T7 internals put the highs, lows, things like that on. So I'll just add that back in. In the meanwhile, what I've done is I've used one of his internal indicators, and we found configurations from some of the personal customized indicators that he's had. This T7 multi, that with the configurations that we use, it creates zones on the chart based on prior price activity and order flow that really seem to be reasonable. So I've actually used some different time frames and bar types and throw them on there. And what else we have here? And then the last thing, one of the last things that I've created is a squeeze type indicator that I use to let me know when price action is compressing a little bit. And let me see what else. So yeah, I'll just leave that off for now. And then one of the core indicators that Troy created, which is the basis for the trading style, basically is called the cycle finder. So it just tries to find cycles in the current momentum and all that. So let me just add some of that on there. So now, oh, I do have I'll turn it off for the moment, but the T7 internals on the ES, I have it configured for to show the opening range. So from the market open for the next 5 minutes, basically I tag the high and the low, and it uses that, at least on the ES I found, for the rest of the day. Tends to be interesting. So here we broke out of here at the opening range, we created the high here, we broke through it here, got away, came right back to the top of the opening range, bounced off, came within a couple of ticks a few times, vacillated around it, and then broke back in. And then when we got to the bottom of the opening range, and remember, this was created all the way back here at the open. So we come back to it at the very, this is 45, 46 minutes later. It was just interesting how we came right back to the bottom, revisited it, it's not surprising, and bounced off of it, and then we broke through. So I keep that on my charts too. It does kind of make the screen a little bit colorful at times. So, but I like to keep it on there for my own trading. And We can just disable that and take it off to make it a little bit cleaner. So again, here we have some of the stuff that we've been working on. So the multis create these zones that help us to have an idea of what may happen later, not always, but we can see this first zone. We kind of bounced off it a couple times. Again, it's a zone, it's a region. This caused an area for price to hesitate before it continued down. Where did it go after it broke this zone? Went down to the next one and kind of bounced off that a couple of times, broke it to the bottom, vacillated. Even though we stopped plotting it, because I stopped plotting it after we break it by a tick. But you can see here that for the rest of this move down, it still supported that same area, was still relevant, even though, because we didn't break it decisively, and then it moved back up. So anyway, those are some of the things that I've been working on. Here, this zone started plotting all the way back here. This is none of these indicators refresh or repaint. This started plotting back here based on the prior price action and analysis. And after this little pullback here, we pulled back right into the middle of the zone and rejected right off of it. So I've just found that kind of interesting. They're not, always work magic 100%, but here we bounce into the zone. You saw price hesitate. But when we come into an area, we find the price hesitate and then we still close up. That little bit of a slingshot there was perhaps, slingshots into a zone, not my recommendation, but in this case, you can see that it actually worked and gave us a little bit more. We came back, broke through the zone, revisited the center of it, and broke away. So that's, and then these little squeezes, the dots show us when we're in squeezes. Just about the last thing here that I may, of course, I should open up for questions too. I do use Bloodhound. So I've worked with a couple of the things that I use there. The Bloodhound can get a little bit colorful on the screen because not everything works, 100%. It's just guidance, and that comes along with understanding price action and the charts and the momentum of the market. But I'll just add that back on. Okay. So again, when we're trending or ranging in a sideways fashion, we want to be cognizant of that. And so, the greens are showing long potential cycle finder entries. So the cycle finder is down here at the bottom. And the arrows, I put arrows on it and highlighted with bloodhounds. You can see where the signals come in. So those show potential cycle movement up. And then when cycles move down, I don't have counter trend because we're above the 200 here. So we tend to be trend following. You can take reversals, but trend following. So you'd be looking for basically longs in this area back here. And then here we're below. So basically looking for shorts. But again, the cloud's above the 200. So we know we're in a transition zone until we're decisively above or below that. So they're not stacked here. So these shorts didn't really work decisively. This first one failed it, just broke by a couple ticks. This one did a little bit, but it was slammed right into a zone that was created back here and pivoted off. Now here we get into sort of things are moving hard up. Here we get a cycle in an uptrend, everything's stacked. We get a cycle that moves back up and we get a pretty good push off of that zone or that progression there. So those are the things that I work with in the room on a daily basis. So the last thing that I'll reference is, and this is something that I've been working on, we did have a really basic auto order assist or entry assist type piece at the very beginning, a year and a half ago. And it was something that I felt could really be easier because I like to have things a little bit more accessible. And at the time we had to go up here into the menus, and to enable or disable things, we had to go up and click in the menu and click a button, turn it on, turn it off. And I thought, well, we have all this extra space over on the right side of the chart. Why don't we just program it and move it down here with buttons and things? So that's what I did. I worked with the programmer. And I'm now on version 2. It's called the Trend Finder. That was one of the signals. But we just kept the name. We do have different entry or auto assist entry strategies. The cycle finder strategy is alone by itself here. We have something called the multi. We have a quick pick and a scalper, sniper. And what I decided to do was, instead of having different things and trying to pick and choose which one you wanted to use, I took the ones that I commonly used and I just conglomerated them into one. So we have one main entry assist strategy called, well, right now it's just the Trend Finder V2. And when you enable that, give it a second to refresh. Now it duplicates the cycle on the bottom, because I added this back on for the presentation here, but it has its own built-in cycle. And this is the bloodhound stuff, so I'll minimize that. And this is the squeeze, so I kind of just narrow that down to see the dots. So part of what's built in to the strategy assist is you have briefly what I've recently done is I've had it recoded to where we've turned everything into buttons. And so you can pick and choose which of the strategy items that you like to use. So you don't have to choose them all, or you don't have to choose any, but you probably can choose one or two. So I've selected the 4 that I commonly use. We have other strategies that I've programmed. So I've programmed a breakout strategy, a volume reversal strategy, the slingshot I've incorporated into here. So I found that to be really helpful. And the latest one is called the up-down buttons, up close, down close buttons that are just for momentum plays. When you've missed and you don't have to wait for a signal anymore, you just can get into the market. So your trade panel is nice and clean. I consider it fairly clean. It's on the side here. You would, if something at the top here, the top X buttons that you select to put on here are clickable. As soon as you click it, it enables. It's green when it's enabled. It actually has 3 settings. Each button has 3 settings. It's active, next trade only. So this way, after the first signal that is acted upon from that strategy fires, then it turns itself off. And that kind of goes back to the people I was working with previously when I was seeing very similar type stuff, but they would always disable after a signal entered. And that's not a bad thing. It's just I got frustrated at the time, and I decided, I was like, well, I just want to keep it on or be able to not have to go and re-enable it every time. So you do have that option. You can have it turn on for just the next trade, or you can have it turn on and be active all the time. Now,
Charles,
yes.
hey, we're getting a little late here.
Okay.
Because
Yeah.
I'm gonna have to get going myself.
I apologize. I
So
didn't realize.
what
I had it on my calendar for a little bit.
um,
I talked too much. Thank you.
No. What I'd like to do, and if you're up for it, do you think that next meeting we can start out and you can actually get into this part of your presentation?
Absolutely.
That way we can, because majority of your presentation was kind of a lot of background.
And I apologize. I wasn't sure how much background I should give for.
Yeah, no, it
My
was all great. I loved it, and it's very similar to what I do, even coming at it from a slightly different angle. So I love it, but I think it would just be good if we started fresh next time and we just jumped into, okay, now here is all this stuff that you're now presenting.
Okay, that's good.
If that's cool.
Absolutely.
So I want to say, hey, let's open it up to questions, but it is getting a little late for me. And
absolutely. So what I can do, if anyone's curious, and again, if I don't consider myself a trainer, if you're pretty new to trading and such, I know there are a lot of resources and stuff out there that can probably help you kind of find your way. But if anyone's interested, I can put this into the chat if you didn't already take or put it in, and maybe I missed it. Here's the website. I'd recommend, if you want to get in touch with me, I can just put my information in here and you can just reach out, or you can use the contact forms. I think we've been having some trouble with the contact forms on the website, but they should work. It's just we're getting blanks. And so if you do fail to reach me, then anybody can. But if you like, is it okay if I put information in here, or just leave for next time?
Yeah, no, that's great. You can put the information in.
Okay.
Yeah.
Okay. I'll just put my my mobile phone in here. If anyone wants to talk further or is interested, I'm happy to talk. So that's my mobile. And if I can have another minute here, what I'll do is I do have a Zoom room that I open in the mornings. It's usually open from around 6 a.m. Pacific, but usually I'm there before the market opens. I'll get the room open and start getting my charts and stuff up. But if anyone's curious, welcome to come on in, and I'd be happy to describe it a little bit more if anyone ever wants to come in. So here is the current link. It's a Zoom link, or and you can also I can put my email address in here. If you do email me and I don't get back to you promptly within a couple of hours, please email or call me, because I get so many emails and I often just don't see things. So, but feel free if you like. And then here's the, and I can also forward the stuff later if anyone's interested, anybody in particular. But that's the Zoom link for my open room in the morning. And if it does prompt you for a passcode, there's the passcode for you, 522350.
Awesome.
Yeah. So appreciate your time, and sorry I've been told that, I was just kind of worried that I wouldn't have enough to actually say, and then I got to talking and found out that I just rambled. So I apologize for anyone who fell asleep.
No, it was a great presentation. So I appreciate you spending the time to go from the most basic part of it to building up to where you got to. So
Thank you.
sounds
That's my
great. Yeah,
journey.
if anyone wants to get in touch with Charles, join his room, and you don't have the information, you have this YouTube video you're watching, you know how to get in touch with me. So you can get in touch with me and I can get you in touch with that information if you don't already have it. So that's it for this month's Futures Traders Meetup. Next month, we are going to jump into the details of this little bit more convoluted setup that Charles is working with. And so I look forward to actually getting into that next month. I don't think that I have anything else to mention other than we will have our in-person meetup next week. So send me a message if you don't know how to get to the sign up for that. And again, I want to thank Charles for taking this time here to share this with us. And I think that's about it. So Joel, and I think there's what we have. Let me see here. To Joel and Vincina and Charles, obviously, enjoy. Have a great night. Thanks for being here, and we'll see you next month, and hopefully maybe next week.
Thank you, Jay, for your time. Thank you, Joel, for the comments. And if anybody can, if anybody wants to talk about Ninjatrader or tuning or any of that stuff, I can probably help, because I've gone through a lot trying to get Ninjatrader optimized or settled down. Anyway, hope you all do well. Good trading, and appreciate your time.
Thanks, Charles. Have a great night, everybody.
You're welcome. Have a good night.
Bye.